The largest liquidations in history are now over. Let's have a look at what happened, what is happening, but the biggest question of all, what is coming next? We're going to spend a brief period of time looking at 1 and 2 and the majority of the video looking at number 3. So make sure you hit the like button, subscribe to the channel, Jehovah Macro Cycle Analysis. Thanks again for all of your support on the channel. Basically here nearly every day for the bull markets and the bear markets, Bitcoin, cryptos, the stock markets, precious metals, and of course the real estate cycle. If this is your first video, thank you very much for joining us. So a brief recap, the last couple of hours, Trump has now flipped on his tariff scare for China. He's saying, don't worry about China, it will all be fine. Highly respected President Xi just had a bad moment. He doesn't want depression for his country, and neither do I. The US wants to help China, not hurt it. And that was following his massive post on Friday afternoon, of course, Saturday morning where I am, and essentially just stating that he was going to impose a 100% tariff on China because of their moves for the export controls on rare earths. So China warns US of retaliation over Trump's 100% tariff threat. China is talking about holding back some of those rare earths. Of course, the US wants those rare earths for all of the electric vehicles and AI and everything else that they are building in technology. And we can see here from TradingView, looking at the overall news over the last 48 hours, crypto crashes $19.5 billion, basically the biggest on record by a very, very long way. There, of course, are a number of stories that have developed from that. I'm not going to go into all of them here because they are separate videos on their own, but really they are not necessary for what comes next. The main stories there are, one, we saw huge liquidations after Trump posts about the tariffs on his social medias and of course on X as well. During that period, there was a short position that was opened, and that's basically been the talk of the town over the last 48 hours. They opened it right at the top and sold very close to the low, making about $192 million in profit. And then, of course, the other story is that a lot of these exchanges like Binance were essentially manipulating the markets. They had to close their exchanges because they just couldn't handle the amount of volume going through them or whatever reason happened there. So that's basically my take on what happened and what is happening. What we want to know is what is coming next, but what I can offer are the probabilities of what happens next based on the chart. And things aren't looking that bad, at least according to myself. Now, we've got a bigger report coming out in the next 24 hours. Link in the video description for TIA Premium. Check out the free report here. Name, email address, crypto and economic report, and Bitcoin, of course, a real estate cycle. Then comes the altcoin report, and then comes Bitcoin. So you've got a few free reports coming out this week. You'll find that in the top of the video description. So what we can see from the last 24 hours are two nice green days. So we've got two green triangles now on these two bars, following three red arrows or triangles there at the top. Those suggest that the market is slowing down and that we could go into a much longer period of consolidation, sideways, and so on, just like we saw in December of 2024. Here is that signal there. You got 1, 2, 3 lower highs, lower lows, and I've purposely turned the bars on white so you don't get confused with the colors of the days, because we're interested in what the price action did on that day, not where the market closed for this particular signal. And if you have been following the channel, you know just how well this signal works out when it comes to very key turning points. Again, in March 24, and the other one there was December 24, 1, 2, 3, and basically 30% corrections that stemmed from those highs. But more importantly, I think it's the time because the majority of people just can't hang in there for really long periods of drawdowns. This one was 5 months, March to August, then took another month for a higher low, then took another month for another higher low, and then a few weeks later we had the breakout. So all in all, underneath that all-time high of 74,000 was nearly 8 months. Now, I'm not suggesting there's going to be 8 months this time. What I am suggesting is that it can take some time to recover. However, and this is the big point here, is the 3 bars up could cancel the down. Just like we see from the down, green, 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 if we're to get 3 big moves up and they start to break out of resistance level, as I'll cover next, that could invalidate this signal right here. There's always going to be an invalidation to a signal. Otherwise, you can't have a signal. Like there's opposite sides to every signal. Now this is it here. Maybe we get the 3 green up. If we don't, it's still not the end of the world, because there is still some good resistance overhead that the market looks like it eventually wants to overcome. And at the moment, the bounce back from the low has been pretty good as well. You had this red day here, which was still a down day of 2%, but it was inside. So you've got lower high, higher low. There wasn't too much volatility. Next day was Sunday, which is the day that we have just closed, and that broke much, much higher. So we got a nice move above the 50% of 112. So this is the first one here, or the first time that I'm showing that there, because we're just looking at this 50% to this, to the all-time high. So that's a start. Short term, I still want to see it at the targets that we talked about in the previous video, looking around 116,700 and ideally above the 7-year resistance line, which today comes in at 118,500. And you can see that the price isn't too far away after all of that severe decline and depression over the last couple of days. There was a ton of posts on X of all these people that had become liquidated and they're leaving the market and it's over for them. They'd earned millions of dollars and now their accounts have basically been wiped out and decimated. That's not necessarily a good thing for those people. I'd say it's a good thing for the market to wipe out a lot of that leverage. That's the idea here. And you can see that's essentially what has happened. So not for their personal situation, but for the market and where we want to see things go next. And of course, that's what happened on that day. Huge, huge longs liquidated. Of course, shorts also get liquidated at that point as well. And today we're seeing roughly around $600 million still in liquidations. So there was a time when $250 million was a huge liquidation day. Now $500 million barely rocks the needle. On top of that, look at what we got, guys. Look what we got in the last couple of days. A breakout of the exchange volume. Remember, this is something we've been following for a very long time now. We've used it in the prior cycle in 2021, 2022 to have a look at when we see breakouts in the volume. That's typically a sign that we're going to see further moves in the direction of the trend. All right, now the long-term trend is still up. Here are our monthly bars, even a bigger time frame here. These bars happen on a month, or if you like prefer candles. I think in this case, it's nicer to have a look at the bars because you can see the green here was an all-time high and then a much bigger swing low than what happened in September, which really only took out August by a couple of $100. So now we've seen a much cleaner swing on the monthly. And if you look back on this in 1 year, 2 years, and you hadn't been trading through this period, you would not even know about the day that occurred on the 11th of October. And look at October right now. It's just in the green. There's, of course, still 19 days to go. We're only on the 13th. We're onto the 13th day now. But yeah, it's back in the green, which on Friday afternoon, Saturday morning, you would not have thought that was going to be in the green. Now, eventually, we're going to move this 50%. But for now, we're using the swings themselves. And you can see the support that has come in on the macro scale here, $99,000. So before we finish off with this short-term chart, we are still sitting above the 100K level. Didn't get anywhere near that. Some exchanges did get near that, as I talked about in the video on Saturday, but the majority of them didn't. They sat around 102, 106, 107, and now they've bounced back from that point. Sitting above 112, good signs, ideally above the numbers that we talked about in the previous video. 117 to 118 is going to be that nice strong level. But while it's here, sitting above all these previous lows after taking them out on extreme volume, pretty big volume, this is still a good sign for further upside to come. If this market's able to close up, great. And then watching in the next 24 hours for a possible green bar, another green one here, higher highs, higher lows, with the signal there that should somewhat invalidate that larger signal. So we're going to get some nice stability back to the market. Now, another sign that we have probably seen the low is the market sentiment. You can see we dropped into fear. There is Saturday at 27. There is Sunday, which is for Saturday, of course, because the reading comes out for the prior 24 hours the next day. 24, crypto fear and greed index 24 puts it firmly in extreme fear. Now, next day has bounced back. That's Sunday's bar, which ran higher, and of course is now at 38. So it's still in fear, but a nice bounce away from the low at 24 there. And if that wasn't enough, you have a pairing here on the market sentiment. So some confluence here, it dropped into panic. So that's a -2 on the FOMO finder. Tops usually happen around FOMO and greed. Lows usually happen around panic or capitulation, provided we see them in consultation with the crypto fear and greed index. So you can see this nice low here, extreme fear, and the panic came in, and we had high liquidations, very big liquidations here, and we've seen a bounce away from that point. So everything considered, things are looking pretty good for this to be a potential low, especially if we start to see the price climb and get back above roughly $117,000, $118,000. Now the ETF flows happened again. We had extreme inflows 2 weeks ago, that's this week here, and last week around those highs, some of the largest in history. Check out these green lines. They basically, second in history to November 2024, which is where that all-time high was coming in for the time. That's through this period right here. And now we saw it again towards those highs. You can see right up here, extreme inflows. Last week, I suggested that this wasn't going to be the end of the move higher, as in that the bull market is not over, even though we saw extreme ETF inflows. But when we do see extreme ETF inflows, it's usually a time that the market wants to stop and in some cases pull back. I had no idea we were going to see an extreme pullback like we did on that Friday bar, of course. That was down 7%, 8,700, and the total day's swing from the top to the bottom, $15,500 just for that 24-hour period. That's not what we're talking about, but when you have a lot of people buying, generally you're going to see a pause in that action just because everyone had basically piled in yet again at the highs. Now, on Michael's channel, see right here, my brother, he's talked a lot about this market being a stop-start market for this cycle. What does that mean? Well, we've seen it run to new highs and pull back. New highs, pull back. New highs, pull back. New highs, pull back. Did I circle this one here? New highs, pull back. New highs, pull back. And the only one that really didn't happen was through this period in November, extreme volume. Eventually it got there and pulled back. So it's been a lot of false starts, and it looks like this is just another one of those false starts in the making. Further consolidation after taking out those lows and then looking to climb back. You can see that on the volume, as we've talked about, the liquidations, the market sentiment, the ETF inflows, and now things are starting to look like they want to come together again. But I don't think it's going to happen straight away. Like we've been checking on our predictive cycles, looking at the 5 and the 10-year composite. So bringing those two cycles together in the red line, the blue line is what's happening right now. We can see, and as I talked about in this video here, 11 days ago now, Bitcoin, it's the beginning of the end, October and Q4 forecasts. Those typically get the least amount of views. For some reason, YouTube doesn't push those, or people don't want to see this sort of analysis, although that is the stuff that I've used to forecast for October and Q4. Anyway, that video has a lot of information about this quarter. In particular, I was talking about the first half of October being a tricky time to trade. Again, I did not know we were going to get a $15,000 drop in the market in 24 hours. What I was suggesting, or what I mentioned in that video, is that this cycle, the 5 and the 10-year composite, you can see I'm using the market patterns of 2020 and 2015 combined, suggested that half of October was not going to be an easy ride, and the second half was going to be a slightly easier ride to fresh highs. We did get a fresh high on the 6th, big pullback, and the next part looks like it's going to be a bit of a grind higher. That's generally what's happened over the last couple of days now. And if things are going to carry on as they did with that cycle, it should be a bit of a push coming sometime in the second half of October, which then leads to a further incline. So we're seeing further upside. This is November and December, but that to me doesn't look like it's an easy path there, and nor does that there. Then you get some big pumps, then it's a bit of a grind and another pump. So if you're not worried about the day today, easy. Follow the trend, it's all the way up. If you are worried about the day today, then just take note that there are going to be some easier periods, or essentially pushes higher, but they are there's less time doing those. So less days where the market pushes up, and then more time where the market is trying to consolidate. Something else we've been talking about for years, leading into the peak of the 18-year US real estate and economic cycle, and the volatility comes from more money being in the markets. When you got more money, generally you have more people, more investors, and they are typically newer investors, which get really strung up with their emotions, especially putting their money into the markets. And look at that volatility on Friday, and Monday has just opened pre-market hours. You can see the gap up. This is on the futures market here. Quite a reasonable gap, currently at 2%. I dare say that's because of this particular tweet here. People aren't as fearful of Trump talking about his 100% tariffs anymore, because he's saying, don't worry about China, it'll all be fine. Now, that is right on time with the 5-year cycle that I've been presenting to you here on the channel for months since that tariff crash low. This red line is a copy and paste of the 2020 into 2021. So here it is. There's a dump and there's a rally. This is the period I think we're going through right now. So there's September, October, November. Is it going to take that long? I don't know, but the red line has basically kept us on the right side of the market this entire time. And you can see some pretty wild moves through this period. I had no idea the market was going to collapse a few percent in a day, but this cycle suggested that there was going to be a time where it had to consolidate those gains, give back some of them, and of course, grind away. I don't think the cycle is over. There is not a top in for the stock markets thus far, and I have said this for 10 months, even longer than that, but I posted the forecast at the end of every year, in this case, the 2nd of January, but around the beginning of the year or end of the prior year. And I give a bit of a forecast with some of these things that I'm talking about. Here are all the previous posts, 2025, 24, 23, going back years. You can check all of these out for yourself. Most of them have hit the money on the head. Some of them haven't. But the idea is to stay on the right side of the bull market for as long as possible. The latest one we saw here, S&P, NASDAQ, DJI will close higher, but not without a significant correction in 2025. That happened to be the tariffs. Anyway, that's another reason why I think we've still got further to go in this cycle. Gold futures are also up and $2 away from another new all-time high. So I think we've still got further to go in this cycle. Everything is still heading up as part of our everything bubble. This is what the everything bubble looks like when we overlay each of the assets, orange being Bitcoin, yellow being gold straight up, green being the S&P 500. I use green being the greenback, a lot of money coming in there. And then the white is the first signs that we're starting to turn over. It doesn't mean everything turns over together. It just means that we're not seeing the home builders, the real estate values heading higher when the rest of these markets have been heading higher. That's part of this everything bubble coming to an end. But firstly, we've got to see much higher prices, a big blow off top there. And we're seeing gold outshine the paces of Bitcoin. This is a chart of gold versus Bitcoin, or Bitcoin versus gold. Bitcoin used to buy 40 ounces of gold. Now today it only buys 28.5 ounces of gold. We can see the trend, lower highs, higher lows. This has been breaking down over the last few months. Although I think there's still further to go for Bitcoin, it may be part of that season where we just trend sideways now and until we get to the end of this cycle. Just how much longer does the cycle have to go? The data still suggests there's a fair bit of time. Fair bit could mean 12 months, 18 months. Let's keep watching the charts. But in terms of this data, bull markets might be 3. So this bull market is 3 years old at the moment, but it is still young. Note that 5 out of the last 12 bull markets, according to the bull market, bear market theory, a market has to drop 20% for it to turn into a bear market, which is different to the 18-year cycle that I'm using. But looking at this particular data, 5 out of the last 12 have started in October. October, 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 and the last one here started in October. That's when the bull market started from that low. Now, each of those have been 4 years, 2 years, 6 years, 5 years. We're currently at 3. So they're the shortest out of all of these years, which make up the average at 5.5 and the median at 5. And so if we're looking somewhere out to 2026, maybe to early first half of 27, then this number is going to come right into the median or just short of the median, something like this one here, around that 4 years. So I'm not looking out 12 years or 11 years, but for now, let's keep it conservative and just look at some of those shorter numbers. And the percentages also suggest there's a little further to go here. We're at 88% so far. Could be somewhere up around 114% to the upside for the S&P 500. This data right here also shows that the S&P 500 generally goes higher after one of those large days of a decline from an all-time high. S&P 500, after falling 2.5%, which we know it did 3%, while making an all-time high yesterday. So it got an all-time high and then it fell. Look at the 3 months, 6 months, 9 months, and 12 months later. The percentage that is going to be positive is very, very high. 90%, 100%, 100%, 90%. There was one occasion here in 2000 that the 12 months was not higher. It was down by 3.7%, but overall, 12 months later, most of the time the market is going to be higher, which then puts this out to October 2026. October 2026. Let's take a look at that in 6 to 12 months time and follow up with the data there. Look at the average, roughly 12 more percent, which also lines up with around these numbers here. You know, another 12% takes you up to 100, just above 100. So things are coming together for this move. The NASDAQ also found a low and also is suggesting it's a bit of a grind higher from this point. Depending on what happens over the next couple of days, I think we at least recover a little from here and then probably head higher sooner than this date here at the end of October to at least test a high. But the main thing we're following here are the market movements. You can see how it's run up and then found a bit of a resistance. You can see the resistance here, and then it found some downside, another run up, finds a bit of resistance. So we're watching the pattern of the actual move itself, not trying to find the next all-time high. We're just saying that overall the pattern is still higher. And if that is still higher, then I suspect Bitcoin is going to go higher as well. The green line again, S&P 500 has broken out of the logarithmic resistance here that stems from the GFC 18 years ago now, 2007 to the low in 2009, and we got a pullback. Maybe a pullback onto the top support, resistance becoming support, which is still a good sign for the bull market. And if we turn on Bitcoin, you can see Bitcoin basically runs up with the S&P 500 when it gets some clear territory, and it's been following it pretty similarly this entire path in this bull market zone. It doesn't look like the crypto markets are fading this Q4 yet either. We still got more money flowing into Ethereum now. Bitmine buying up more and more in that company of Bitmine. It found a low at 3,400, has come back above the low at 3,800, which is what we're looking for. And on the day, Friday, it closed just above that level. So really strong signs there for ETH. And the following day, Saturday, not much happened. And then Sunday, big move higher. And look at where it closed the week out. It closed above 4,100. They were all the previous highs of this cycle. So pay close attention to those closing prices. Check out this weekly close. Very, very nice indeed. And it closed just above the week of September. So that was another very, very important week. And it closed right on that point as well. So it looks like some strength building again for Ethereum. Even if we see some further downside, it looks like the majority of the fear has been washed out now, especially as we've seen a nice 30% correction. What we're looking for, 20 to 30% correction for ETH. ETH Bitcoin has also done its legs lower, so we can now take off our down arrows. That's where we were looking. This could be around that point that we would see the low and then the recovery from here. Remember, it hasn't gotten past the 50% yet, hasn't gotten back past the 10-year resistance line. So there is still more resistance to overcome, but you're at least much, much lower now. So those stops could help if this doesn't continue on. The USDT dominance has fallen away from those critical resistance levels. If that happened to close above those levels, that is really bad for the bull market, but it didn't. So we're underneath 50%, and that's where it closed underneath for the week. It closed underneath the diagonals, both of them actually, and underneath the 50%. So again, we need to tackle 4.6, getting back under that, and then 4.1. So it's done some, I was going to say major damage. It did a lot of major damage to other accounts, but it has cleared out some of the leverage. People flew back into stablecoins and have since taken that money out of stables and then bought back the crypto as well. So that's exactly what you want to see, especially coming under these resistance levels. So that happened for USDT and for the combined stablecoins as well. It fell back underneath 6.8. So another good thing for the markets. The stablecoin market continues to climb. $300 billion in stablecoins. That hasn't really taken a hit. We're still seeing more stablecoins being printed, and we're seeing stablecoin dominance fall. So the stablecoins are obviously going somewhere, and they're still going back into Bitcoin and Ethereum. For altcoins, sure, it bounced. This may be the low, but it hasn't recovered the swing lows here at 7% entirely. Look at this. We've got a close at 6.99. Why couldn't it do that extra couple of percent or points of a percent? We don't know, but it does need to get back above this whole consolidation area, and ideally above that the bar that collapsed it on Friday. So somewhere above 7.7 as a start, and then above 8.6. So this is for your altcoins yet again. Short-term trading has been great for a lot of people, and obviously terrible for some, or others with those massive liquidations. But if you're able to keep yourself safe in the markets, the volatility has been the key there for a lot of these trades. Like you can see with Binance, I mean, say what you want, it could be a whole host of manipulation, big bust down to 880 bucks, and then a huge recovery over the last 2 days, basically back to the all-time high prices at 1,300 US dollars. Hype, huge flush out down to 24, back to 40, but in a much weaker position. Sol climbing back, a nice weekly close above 195, key 50% level yet again. So a flush out of 15%, and then a close back above for the weekly. So again, that's looking pretty reasonable there for Solana in a relatively strong position overall. Sui, one of the biggest flush outs, but then huge recovery back to $2.80. Still needs to get back above $2.90. This one has closed underneath that 50% level of August to January. So not in the strongest position there. And XRP, another major flush out, closed at $2.50. Now we've got a new 50% level because of the flush out. Look at that invalidation. I mean, if you had stops, it's just part of the game, the wild west. It took out everything and ran almost all the way back to the accumulation before the breakout. You can see this on XRP BTC. It ran all the way back to those lows as well. So my price targets for this cycle are still on track. I think we still have the chance to hit the mid 130s. Then we look to the mid 140s, and then I'm jumping up to around the mid 160s based on a few historical price extensions using major ranges here for this cycle. But of course, time is running out. Looking somewhere in this quarter, potentially the first couple of weeks of January 2026. Don't go anywhere, hit the like, subscribe to the channel, and if you want to see an interview I did with Adam Hudson over on Unemployable, check that out. Go and search Unemployable. I'll leave a link to this in the pinned comment down below so you can see it. This one I recorded a week ago, so on the 6th of October. Thanks again, guys. I'll see you back here at the next video. Until then, take care and peace out.